All right, glad to have you back. Let's get to our second half for the next discussion. The NESG and Stanbic IBTC Business Confidence Monitor reports shows that as projected, Nigeria's inflation rate would decline to 27.1%. That's 27.1% by December 2025, providing a glimmer of hope for businesses and consumers grappling with persistent economic challenges. Now, this forecast reflects a cautious optimism about the gradual stabilization of the Nigerian economy as structural reforms begin to take effect despite ongoing headwinds. Inflation has been a persistent challenge for Nigeria's economy, with rising fuel prices and currency depreciation driving up costs across all sectors. The report noted that inflationary pressures were particularly pronounced in 2024 following the removal of fuel subsidy and the liberalization of the foreign exchange market. However, it projects a gradual easing of inflationary pressures in 2025. Mr. Vahyala Kwaga is the head, Open Government and Institutional Partnership with Budget Nigeria. Thank you so much. Good afternoon. Thank you for joining us. He joins us live from Abuja. It's good to see you. Good afternoon.
Thank you so much, Tolu, and Happy New Year. Thank you so much for having me.
Yes, it's good to see you too. Happy New Year to you too. I think we should start with experts projecting and reprojecting the outlook for 2025. In your thoughts, we've seen figures from the IMF, from the World Bank, and sometimes some figures are reversed and revised. How would you react to this?
Thank you so much. I think it's a great place to start. The global projections for GDP growth are somewhat muted. Most of the projections seem to revolve around a 2.5 to around 3.3% GDP growth globally. And, you know, the usual suspects are actually to blame in this instance. High import tariffs from the United States, you know, a growing demand for commodities from the key emerging markets, and, you know, a lot of attention on India and China, which are being touted as some of the main key drivers behind what would be modest growth. I think in 2024, India was able to enjoy around 7 to 8% GDP growth. And it's interesting because India and China are, of course, you know, members of the BRICS platform. And these are some of the nations that are really pushing forward in terms of the use of, you know, rare earth metals and other significant commodities, the lithiums, you know, etc., used for electric vehicles, for mobile devices, and other electronic products. So a lot of that, you know, will come from those BRICS countries. Western Europe, I know, is also struggling with GDP growth. They are having serious fiscal problems. I know some countries in the Eurozone, France, you know, and even England are not experiencing very high gross domestic product. But you can also trace that to their budgetary management. With France, of course, you're aware of the challenge that Macron has been having, you know, with balancing the budget. And the French budget has actually, you know, experienced significant deficits for quite some time. So the outlook generally, I suspect why the analysts have been reversing is because it's, you know, it's very early to tell at the same time, but some of the signs are already there with a Trump coming into the White House, you know, in 2025, and with a lot of these BRICS countries driving growth. You know, it really remains to be seen how well and how strong and how resilient the growth will be. But if I was a betting person, I would put my money between 2.5 to 3.3%, you know, at the very least.
All right, I'm putting that in my jotter now. I'm noting that down. 3 points. Yes, I'm going to take note of that. And we're going to talk about this again, God willing. I will look at these figures. But I think I quite agree with your submission. It's quite not too, you're not over projecting looking at that. But let's look at our budget and the spending plan for the year 2025 49.7 trillion naira is what we are looking at. It's quite huge. Some will tell you that this is a bold step by President Bola Tinubu, and he calls it a budget of restoration, considering challenges that we've faced as a country. Now, what do you make of the assumptions of this document? Because that's the reality on ground. Crude oil is projected to hit about 2.06 million barrels at about $70 per barrel. We're also looking at how inflation can taper down, a bit to about 15%. That's what they are looking at. But generally, what do you make of these assumptions and that spending plan?
It's a very, very interesting question you're asking. Let me just quickly go to the budget size. I know Nigerians complain a lot that the budget size is expanding and we are budgeting a lot of money. But if you look at the trend and if you control for naira devaluation and for inflation, our budget really hasn't grown that much. Even within the past 7 to 8 years, in dollar terms, in real dollar terms, our budget hasn't really grown. From 2023, I think it's slightly dipped in terms of absolute dollar size. So the truth of the matter is we are not spending enough. And this may sound, very, very ridiculous to most Nigerians. But the idea is that the budget is meant to at least be a reflection of the size of our economy and the size of our population. Our comparator countries, our peer countries in Africa, the Kenyas and the South Africas of this world are spending nearly three times what we spend on our budget, and their population is at best 1/3 of ours. So we really are not spending enough. A question of whether we're spending efficiently or responsibly is, a conversation for another day. But as big as that might sound, I think it's not more than $30 billion at the very most. So looking at the assumptions, I find them very curious. And, a lot of analysts, some who have been on your show, have also expressed some form of skepticism as to some of those assumptions. The oil production is a very interesting one. And, we have seen an Aramco grow, to what it is today, being publicly listed, and declaring profits. We're seeing the work of Petrobras in Brazil and how, effective and impactful that corporation has been in terms of providing crude oil, looking at the OPEC countries. And then the United States, again, is going to feature in my postulation because a Trump-led U.S. will most likely want to go back to shale oil, thereby, providing excess crude oil to the world supply. And this would likely result in a drop in oil prices. And if we are budgeting a $70 barrel oil price, I suspect that it might actually go to as low as the 60s, if not less, because there will likely be an oversupply of this commodity. Looking at the inflation projections, another very interesting one by the federal government, we are balancing between 34% inflation rates. I heard some rumors that it might have gone down to as low as 27% as at December 2024. But the NBS has been having a bit of challenges with its website, so we are not very clear. But be that as it may, a 15% inflation projection, I think, is very, very unrealistic. And the federal government should provide much better explanations as to how that figure would be arrived at. One principal reason why there's a lot of pressure on the naira, even from a fiscal perspective, is our poor reserve management. Now, to the credit of this government, it has been brought back to, I think, pre-2022 levels. We're back at $40 billion. But, experts such as ProShare, organizations such as ProShare have said that it needs to double that amount for it to even reduce some of the significant pressure on the naira. As it is known, we depend a lot on foreign inputs. For us to be an import-dependent economy, I think is another conversation. But I think to a very large extent, in terms of inputs for manufacturing and production, we are highly import-dependent. And that means there is constantly pressure on the naira. The central bank is trying what it can to work on the money supply and the interest rates. But I think those really hurt the real sector in terms of their access to credit than looking at the real problem, which is an inability to produce enough goods, high value goods that the world needs, and to shore up, that additional excess foreign currency. So the government, again, to its credit, is trying to work out certain frameworks that would again reduce that pressure. The FOCAC meeting happened recently, and the president was in attendance. I think there was some interviews by the Minister for Foreign Affairs where he did say that the renminbi naira exchange deal, is coming back on stream. And I think that would bring about some ease on the naira, maybe not significantly, because yes, China is probably one of our top 5 export partners, but in terms of sheer size, I do not think it amounts to the combined effect of our other export partners. So there still needs to be a lot more done in terms of port management, in terms of the customs arrangement and framework, in terms of internal logistics, because for you to be able to export goods, they have to be able to leave point A within the country down to point B at the ports, off to point C, which is their point of destination. And for an average businessman to tell you that it's faster to ship my goods from China to Lagos than it is to move them from Lagos to within Nigeria tells you a lot about the state of our logistics. There are several comments about how to improve other ports and other parts of the shoreline. And going to the final key issue, I think, assumption, which is the exchange rates. I think the federal government was a bit modest in pegging it at 1,500 naira.
Yeah.
There are speculations that the naira still hasn't found its true value. And experts like Bismarck and Wane have said that it should be around 800 to 900 naira at the very most. And now that we have exited, yes, the dirty December period, as the young folks call it, I think the true value of the naira might begin to reflect a bit more with the easing of import restrictions. I think the import regime would also tell on the value of the naira. If the energy provision, the move, to much more sustainable, regularized sources of energy can also come on stream and really enter into the production process, there might be some improved production. But you can see that these are still these are knock-off effects that might not really have the impact at the very end of the day on the naira itself. Because the real issue is about providing a value add for products that we can export, to other parts of the country. So, in summary, I will say that the assumptions, I think many of them need really to be tapered down a bit, and to consider more of the global headwinds.
Interesting breakdown there, looking at the 2025 spending plan. But let's come back to look at our business environment. The federal government has also shown so much interest, of course, around improving the business environment. We see what was happening with PEBEC, and she's now the Minister of Industry, Trade and Investments. That's Dr. Jumoke Oduwole. We saw the good works there when she was heading PEBEC and the essay with regards to ease of doing business, Nigeria's positioning and all of that at that time. But in your assessment, what do you think about our environment? What sort of conversation should we be having to drive the needed investment that we need? We've seen some good deals. The Shell Bonga deal is something that everyone has been talking about. $5 billion US dollars. That's no small money coming in. It shows that Nigeria is still that investment destination. But what more do we need to do in your thoughts?
I mean, I think I would even add to that the divestments really are a sign that there may have been some improved capacity in our homegrown oil and gas corporations. And, it will be to the benefit of all Nigerians if these corporations can succeed. There needs to be, adequate oversight and, prompt regulation to ensure that, these corporations act within the ambit of the law. But it is pleasing to see that, these deals are coming through. I will say that there are some presidential directives that President Tinubu signed, I think, very early in 2023 after his inauguration, that are also quite positive. One of them being the executive order regarding the timelines for contracting in oil and gas contracts. I mean, this is a direct attempt to minimize the bureaucracy and red tapeism that is more or less a characteristic of doing business in Nigeria. And this is where I'll make my entry point. The key issue for corporations who want to come and invest in Nigeria is how will this affect my bottom line? True. If foreign investors see that they will have to pass through, kilometers of red tape before they can successfully invest, I mean, your guess is as good as mine that they will not want to bring their money here. The governance regime, the stability of policy making and policy implementation is another key thing that foreign investors really want to look at. Is it possible that, one morning I could wake up and turn on the TV and see that a policy that has supported my business would simply be reversed, and I would be left stranded and my investments, would have taken severe losses? These are the types of very reasonable questions that investors would have. And it means that the government needs to adopt a very, very strategic approach to planning its policy, to, implementing its policy, and to evaluating its policy. And this also calls for proper oversight by the regulatory agencies themselves. They need to be at least at the top of their game regarding the evaluation and monitoring of government policy. So we're talking about data, statistics, we're talking about, investigations into the effectiveness and how that also affects the bottom line of the government itself, because ultimately the government wants investment. Why? So that it can improve and shore up its own revenue projections. So the government can make this thing a win-win for the corporations and for the Nigerian government. With the liberalization of the Naira, I think that's a good indication that the government is going to end the arbitrage that has been surrounding the supply of foreign exchange. And I think that is a good indication to any foreign investor. But looking at, the more sectoral components, so when you make an investment, what are you looking at? You're looking at access to finance, you're looking at logistics, you're looking at cost of inputs, you're looking at the quality of skill and labor. If all of these issues, which are not only the headache of the president, but fundamentally the headache of the state governors, if these issues are not addressed, fundamentally, then foreign investment and even local investments will really be discouraged. And all you will see is investments in high yield, relatively low risk endeavors, relatively, like agriculture, which, is the mainstay of, apart from oil. I mean, in terms of GDP size, I beg your pardon, agriculture, and now we're having more and more services. In fact, I read recently that the services sector contributed historic amounts to our gross domestic product. And I think that is a very good sign that there may be some light at the end of the tunnel as far as, some of the policies of the government. However, this has to be taken with a pinch of salt, because the subcomponents of the services sector, hospitality, telecommunications, a lot of them have to do with urban centers. And, these urban centers may not necessarily be reflective of the total population. These urban centers may not necessarily reflect, the impact of policy as is. So these things, of course, need to be taken, a second look needs to be taken on them. But the government does have, a lot of work cut out for it. I see, the move by a lot of corporations and even households to more sustainable energy, which will cut down costs of energy, which, I said earlier, is a significant driver of general business costs, for corporations. But, I'm an old-fashioned guy, and I think that we should focus more on the manufacturing sector. This has been neglected for far too long, and this really, to me, is the key that will unlock Nigeria's prosperity. But it must be followed up by an improvement in the logistic framework. I'm talking about roads, I'm talking about bridges, I'm talking about vehicular infrastructure and transport services. You should be able to take your goods from Sokoto to Maiduguri in a very cheap, speedy, and efficient way. You should be able to move your goods from Maiduguri to Lagos or from Sokoto to Calabar, diagonally across the country at a very cheap and efficient cost. And these are the types of things that will encourage not only local businesses, but even foreign investments to come in and plug their money, thereby allowing a lot more revenue to be made. I will end on this note that this revenue projections, the ease of doing business really cannot improve if the fundamental fiscal framework, the legal framework is not addressed, and I'm talking about the tax bills. I sincerely hope that the National Assembly and the presidency are able to, work together harmoniously to have these bills passed, to bring some sanity to the tax regime.
My friend Vahyala Kwaga brings his legal expertise into the conversation. I must thank you so much, Vahyala Kwaga. He joined us from Abuja. He's head open government and institutional partnership with budget. Thank you so much. It's good to see you. And you're in Abuja now. You'd have been in the studio live, but no problem. We'll keep talking, even via Abuja studio sometimes.
I promise to be in the studio next time. Thank you so much for
having me. All right, then. Do enjoy the rest of your day. Have a great weekend. All right, then. Well, let's look at what the figures are looking like. It's time to talk markets. And the market is 0.07%. I think it's pretty good to wrap up this week for the market. But we'll take a break. When we come back, Mukhtar Mohammed will join me. He's a stockbroker, financial analyst. We'll look at the figures from the market and do a review for the first week